Hello, this is Jeffrey Cohen, April 7, giving you today's top dividend stocks. You know, we're going to do this every day to help you make money in the stock market. So what is a top dividend stock? It has 5 attributes. It's U.S. listed on a U.S. exchange, trades every day, passes our extensive data validation. So it's actually a common stock. It's profitable. Net income is greater than zero. It has a high efficiency. This is the key. It's like a Sharpe ratio. Risk versus return. This has a better risk versus return than the S&P 500 index ETF, which is a really hard bar to beat. And the dividends paid over the past year are greater than the dividends paid by the S&P 500 ETF. Today's picks: Blackstone, Carlyle Group, APAM Artisan Partners, Qualcomm, Guess, the clothing company, Virtus Investment Partners, that one I'm not so familiar with, Avgo, which is Broadcom, and AMP, Ameriprise Financial. For those who listened yesterday, you know that was one of the first stocks we ever recommended, probably about when it was half the price. If you want to see this list every day, here's the website, www.chicagoquantum.com/dividends. So let's dig in. What are those stocks, Jeff? And how can we profit from them? So here we go. So the first thing I'm going to do is show you 2 exchanges. And thank you to Yahoo Finance for making this available to us. So the first is QQQ and Spider. So what's happened on these, yesterday for the first time, QQQ actually showed better in our model than the Spider. And you can see here that the QQQ has actually fallen less. So today might be a tech day as opposed to an overall economic day. But so first thing I guess I want to point out is they're all red. So if you're a dividend investor and you want to buy the best dividend stocks, then buying today was better than buying yesterday, because when you buy at this price, the effective yield on the money that you've invested has gone up. So let's take a look. Jeff, what can you tell me about these stocks? So BX is Blackstone. Blackstone Group is trading at $114.59. It's about a $140 billion market cap. What's interesting is their forward PE is about 19. They're paying $3.57 a share. They're saying they're going to pay $4.06. That gives you a nice yield of 3.43%. And it trades at 9 times book. CG, Carlyle Group, is cheaper on a lot of these measures. They trade at 3 times book. They only pay $1, so it's a 2% forward dividend yield. APAM, 9 times book, paying a 10.5% forward-looking dividend. These guys are crazy. Forward PE of 8. They're saying 4.6. They're going to pay almost all of it out. Must be a REIT or something like that has to pay out 90% of its earnings. Qualcomm. So Qualcomm yesterday, we shed a lot of tears along with investors. This stock has been dropping dramatically. Forward-looking P on Qualcomm is 11. Dividend per share, $2.72. So it's paying a little under 2% dividend. It's trading at about 14% book. But Qualcomm, as you know, right, riding the Bitcoin wave, graphical processors, really a good growth company. Guess, the jeans, the clothing maker. Relatively small cap, 1.3 billion. Forward PE is 6. Dividend per share, 56 cents, and they're saying they're going to pay 90, which is a 4% dividend. They're 2.2 times book. I'm not sure what's happening with Guess, but it keeps showing up in our model. We like it. Avgo. Avgo is Broadcom. So similar to Qualcomm, you have Broadcom. This one, very high valuation, is $245 billion. It's a large cap stock. It's trading with a forward PE of 15. So interesting. The model is a technical analysis model, but these are not bad PEs for high dividend payers. They're promising a forward dividend of $16.40, which is a 2.72%, and they're trading at a little under 11 times book. AMP's final, the Ameriprise Financial, they have investment advisors similar to what we do. Forward PE of about a little under 10. They're promising a dividend of $4.52, which is 1.55, trading at 5.5 times book. So this is your list. What else would you want to look at? I think the most important thing, oh, by the way, we do not have a position in any of these stocks. We are doing this for you, our listeners. We may buy these stocks as we build up a dividend yielding portfolio. We may also offer this to our clients. But for right now, this is just for your information. Look at the fallings. So basically, your money managers are down. Your investment managers are down. And your tech is down. Tech is down the least. Money management is down the most. And I guess it makes sense, right? So the stock market, it's rough right now with what the Fed's been doing. We took a look at FinViz. I like this. This is the map that you're probably all familiar with. You can see today's performance. Why don't we take a look at 1 month? It's green. 3 months, it's red. So 6 months, it's mixed. 1 year, it's green. So if we look at the performance, let's say over the past week, this is a very red market. You've got some moves in consumer defensives, real estate and healthcare, and utilities, right? So interest rates going up, counter-cyclical. This is where you want to put your money. And so it makes sense that money managers would be seen as having a tough time moving forward. So thank you very much for listening. It's Jeffrey Cohen. If you want to take a look at the website, you would go to chicagoquantum.com. Under market questions and data, I've got 2 different flavors of it. Top dividend stocks today. Here they are. And this is how you find it. So thanks very much. You take care now. Bye-bye.